It's sunny. It's SunnyInVan.
Hi everyone, SunnyInVan, where the grass is always greener. In this episode, we're going to discuss what does $22,500 get for you for a home out in Vancouver, BC. Before we get to that, disclaimer alert, the content on this episode is for educational and informational purposes only. This is not financial or professional advice. With that being said, let's get right into it. Now, as you can already see in my background, I do have my whole setup here with a property of $450,000. But before we get into that, let's see exactly what that property looks like.
It's sunny. It's SunnyInVan.
So we're over here at realtor.ca, and as you can see, we have a $450,000 property, and that is located in 6963 Victoria Drive in Vancouver, British Columbia, and it is unit 201. This is not my listing, this is Shirley Pang. If you're interested in purchasing this home, feel free to contact us. All our contact information is in the description below. Okay, now but let's get on to this here. Let's go through some pictures here quickly. As you can see, living room, you got a kitchen, a little bit dated for sure. It looks like a little bit of a den here. Room, washroom. Looks like storage. That's your entrance. Hallway in the building. That's outside the building. Looks like there are shops on the bottom. Entrance to the building. Another picture of the kitchen. And I guess another hallway area. Not really sure what exactly that is. All right, let's go into the description. Attention first-time buyers. Victoria Park, heart of Vancouver, for one of the most affordable price. Great value for entry-level small families or couple. Enjoy close proximity to abundance of shops, restaurants, schools. Lower maintenance fee, $282.55 per month. You've found a home. You know what? There are no pets allowed, so if you have pets, this may not be for you. Long-term rental is accepted. Sold as is and where is condition. New roof, and roof has been changed last year, which is good. Single family, time on realtor, so it's been on there for 349 days. It was built in 1996. 575 square foot home, and it has $974 a year for annual property tax. Total parking spaces is 1. And let's quickly look at the statistics. This is by East 54th Victoria. Control. Let's zoom out here so you have an idea where exactly this is. Vancouver, Burnaby, Surrey right here. And let's just zoom back in. So in this proximity, you have a population size of 631. Average household income, $73,000. Number of households in this area is 213. Medium age is 40. Households with children, 77. And average household is 2.9, roughly 3 people in that household. Let's move on to a sunny world.
It's sunny. It's SunnyInVan.
All right, everyone, this is my world here. This is what I love to do. I love to analyze investment properties. I love real estate, and I love crunching numbers, and we love building out these charts here. But let's go through this one by one. So we're going to start off with a 5% down payment. Now, as you saw earlier, it was a $450,000 home. And if you were to put a 5% down payment, you're looking at $22,500 down payment. That would leave you with the mortgage of $427,500. Now, if you had a mortgage rate of 6.1% and you amortization of 30 years, your mortgage payment would be $2,590. Call it $2,600 a month. Now, at this moment, we would like to always say in this show, start looking at your financial situation and see, after tax, are you making roughly $2,600? And over and above that, do you have enough money for your living expenses? If you do not, and you do want to purchase a home, maybe you are living with family or friends and you could purchase it and rent it out, or you can pool your money together with family friends, make sure that you have the right amount to be able to afford this home. You can live in it, split the cost, or get it as investment property. We'll go through a 20% down payment a little bit later here, and let's just quickly go through the rest of this. Now, we do have a simple calculator of what type of salary you're going to require to get something like this. Looking at roughly $84,000 to be approved to get a house like this. Now, I'm not a mortgage broker or a financial advisor, so please do speak to a mortgage specialist about this. Now, this is taking into consideration of 39% of your salary that would then be used to pay for that mortgage. So 39% of your salary needs to cover $2,600 a month. It's pretty straightforward. However, we're going to do this as an investment property as well. So let's just say that you put down 20% today, which is $90,000. You're looking at roughly a $360,000 is roughly a $2,200 monthly mortgage payment. Now, out of that payment, we're going to take this a little bit further. Now, this is month to month. So if you were to rent this out for roughly $2,460, you're going to have a monthly payment of $2,200, a little bit under. But you can see right now that your monthly rental income that you would collect is more than your mortgage payment. So what happens here is not only are you building equity on the month-to-month payment, you're also building a little bit of cash flow, and that's roughly $147 a month. It's not much, but it is something. Now you're not paying out of pocket. If you were to keep this property for 5 years, you would have built roughly $25,000 worth of equity in this home. And out of the rent that you have collected, you would have roughly $12,000. If you combine both of those, as you can see down here, you would have netted roughly around $37,000 over 5 years, which isn't bad. Now, if you kept this property for 10 years, you almost have built $60,000 of equity in this home. And that's roughly around $37,000 of net rent that you have collected. And over the course of 10 years, if you combine those two, that's over $95,000 of equity built for so principal as well paid off as well as the net collected. So $95,000 by investing $90,000, having $2,460 a month in rent, if you can find that rent, that is. If all these numbers worked, then you would basically save around $95,000. So you built, again, almost $60,000 of equity in the home. You collected $37,000 in rent, which you have benefited roughly $95,000, which is great. Now let's take it one step further. If this property were to increase by 3.11% year after year, in year 5, the property would have gone up from $450,000 to $525,000. If you kept that property for 10 years, the property value increase would be roughly $611,000. Now, again, that is if the property would continue to increase year after year by 3.11%. For 5 years, as you can see down here in our chart, you would have a return of 124%. Now, this is if you sold that property with the rental income and as well the property value increase. If you kept it for 10 years, you would have roughly 285% return. Now, that is collecting rent for 10 years, building equity for those 10 years, and then flipping this house, realizing your gains after 10 years. That is if the property did go up 3.11% year after year. Now, take a look at your life right now. Are you renting? Are you living at home? Do you have any other investments? If you do, are you realizing these type of returns? Are you even in the ballpark to even get these type of returns? Now, if you don't know much about real estate and this is something that you want to look into and you don't know where to start, feel free to reach out to us. We'll be here to help you out. We have a great team and we can answer your questions, and we love doing this. We'll find the right property for you that makes sense within your budget. We'll look at your salary, we'll look at the neighborhood, we'll look at all the specs to make sure that you have the right property for you and your family. With that being said, Sunny out.
It's sunny. It's SunnyInVan.